Hello, everyone. My name is Frank Napolitani, and today we are talking alts with Andrew Saunders of Castle Hill Capital Partners. Andrew has enjoyed a 22-year career in the financial services industry, and in 2014, he co-founded and leads the marketing and capital raising effort in his role as president of Castle Hill Capital Partners in New York. Prior to co-founding Castle Hill, Andrew was the head of capital introduction at Lazard Capital Markets Prime Brokerage Unit in New York, and his first position on Wall Street was with Taylor Rafferty, a boutique cross-border investor relations firm. Welcome, Andrew.
Thanks, Frank. This is wonderful. I appreciate you having me.
Sure thing. I'm glad you're here. And listen, before we dive into Q&A, if you could spend 2 minutes and talk about Castle Hill.
Sure, absolutely. So as you mentioned, my last post was at Lazard Capital Markets, which is a great firm. We only helped a specific subset of hedge funds, though. And as I was talking to family offices and endowments foundations, what I was hearing from them was requiring a much broader toolkit. So that and the desire to be an entrepreneur caused my partners and I to purchase a broker-dealer and start Castle Hill. So Castle Hill is a firm we started in 2014. We have now around 20 registered representatives located all over the United States. The last two we brought on were in Birmingham, Alabama, and Dallas, Texas. We focus exclusively on alternative investment strategies, which we're talking alts, so that's relevant. Hedge funds, private equity, private credit, venture, and increasingly individual opportunities and co-invests. Our audience is predominantly institutional, by which I define that as large RIAs, family offices, endowments foundations, corporate pension plans, some public plans, but what I am not is a wholesaler or sell mutual funds. That's a great business. It's just not a business that I'm in. When we look at funds, our funds are more like the $50 to $750 million range. So I would call that a mid-sized space. And the overarching sort of commonality is what I aspire to is strategies where there's a market structural reason why the opportunity exists. So you take an anomaly, you take a market structure inefficiency, you layer on experience, you layer on intelligence and an alignment with your investors, and then you have something, the ingredients of something that's interesting for us. We have two offices. We have an office in West Palm and New York City, which is currently collecting dust as far as I can tell. But hope to be back there at some point in time this summer.
Great, and thank you for that. Why don't we just dive right into the Q&A? Can you explain, the role of a placement agent?
Yeah, sure. So, there's sort of three core elements of a successful asset management business, right? There's portfolio management excellence. There's operational excellence. And then there's sort of client service, marketing, and investor relations. Within that client service, marketing, investor relations vertical, there's that's a specific set of relationships that have been developed over the years. And if you're an asset management firm, you can do one of two things. You can buy or you can rent. And so we are the rental option of that. And we bring a laser focus on one specific area of an asset management business's growth trajectory. So the role that a good placement agent or a third-party marketer or an outside marketer provides is market intelligence, the ability to assist with materials, the ability to get meetings, the ability to get feedback. But what we're doing is we're bringing, 10, 15, 20 years of intimate knowledge and understanding of this investor cohort that we work with and bring empathy to that conversation. So help our managers take a process that may take this long and bring it to this long. And when you do this repeatedly, you can get tremendous leverage. It's hard to switch gears if you're a portfolio manager from, running a model to trying to research an investor to running your model. So our job is to prepare everything and make sure that they're ready to do their, to present and provide information in the way that the investor expects it to be received.
Okay, so there's a number of placement agents and or third-party marketers out there. Mm-hmm. So when someone is looking to choose a placement agent, what should they look for? And also, conversely, what should they look to avoid as well?
Yeah, it's a great question. So the first, I guess the overarching sort of on behalf of my colleagues is the managers should be excited and very happy to write a very large check to someone in my shoes if I'm successful. So the first thing you have to do is be in the mental mindset of like, I understand the business I'm getting into here. So what are we looking for? You're looking how you want to find a person that you enjoy working with, who you feel has standing in the industry and the investors that you want to address. Ideally, places to go would be to talk to investors about, who do they respect. This is not a terribly difficult industry to enter. It is a very difficult industry to be successful in. So that's a key differentiator. What to avoid would be, there's a number of ways to check. Every placement agent should be FINRA registered, so you can check broker check. These are like the easy red flags to determine if there's anything untoward that will come up. You'd want to talk to investors. You want to talk to other managers, and you want to talk to the placement agent's existing manager clients. Not because they raise money for them, they're going to raise money for me, but what was the experience like, and how were expectations managed throughout the process?
Understood. Hey, listen, given the current pandemic, and we talked about this off camera before,
Yep.
I would assume your role in communication with your client funds is that much more important. Can you speak about that?
Yeah, it's in all honesty, I spent a couple of weeks in March wondering, like, do I even have a job, or what am I supposed to be doing right now? Because my normal approach to, here are a few of the people I'm working with, and they, this is where they belong in portfolio, was completely irrelevant. So in this COVID world, and I wrote something which I think it's on LinkedIn or something about, like, how do you market in the new abnormal? And the elements of that is, this is an education phase of the process. This is the opportunity to really own the strategy that you play in, your team. So there's kind of three things you should be doing right now. One is you should be thinking about educating and building relationships, not selling. This isn't a closing environment. This is an educational environment. Two, you should revisit and take an opportunity to look at all your materials and everything that an investor consumes, and wherever possible, upgrade the professionalism and the simplicity of it. Let's make everything really easy for people, right? Let's not make it hard. Life is hard. There's a lot of hard things going on out there. This is something we can control. And third, which, using this fine example, is really explore technology. Really explore what can be accomplished remotely, and what can be accomplished through data rooms and screen sharing, and to keep this process going, so that whenever we're allowed to meet in person on a regular basis, where it's not weird, right? Because there's going to be phases of, it's going to be kind of radical, then weird, then uncomfortable, and then normal. That we're still educating, you're still building a relationship.
So, generally clients, or folks outsource functions, for scalability, efficiency, cost reduction. So why would someone want to outsource the capital raising function?
Yeah, it's a good question. So the first thing I would do is, like, gently push back, and I do this for every manager, is that you're not outsourcing capital raising, because at the end of the day, the investor invests in the portfolio manager and the team. And so it's an absolute investment in that person. This is not something the portfolio manager has to be involved. The founder has to be involved. It doesn't work out elsewhere. But what you are outsourcing, and what you are getting assistance with, is how to manage the process and how to build tremendous efficiencies there. So if you're in the hedge fund space, early on, it makes a lot of sense, because you just don't have, a lot of these firms are pretty lightly capitalized, and they just don't really have the P&L to support an internal person. You see situations where you have a COO who's doing operations and marketing, and perhaps has some equity. That model works, but to hire someone that's experienced is generally outside of their capability. What you can do is hire someone junior, and that's generally my advice, is to hire someone junior with the assistance of an external person with experience, educate that person, and then sort of grow that relationship that way. On the private equity side, because these funds go towards specific raises, there's periods of selling, and then there's large periods where there is no selling. So that's kind of where that placement agent model really fits nicely. It's like, they're doing a raise, this is the close, and when you get to some of these larger funds, the role of the placement agent is to actually tell people, that they've been pro-rata down, which is a wonderful situation to be in. I hope to be in that one at some point in time. But
And if you could, what type of funds are you focusing on in
yeah.
Castle Hill? Is it just hedge funds, just private equity, a combination, real estate, growth equity? Can you speak about that?
Yes, absolutely. So as I've been doing this for 6 years, and before that, sort of 5 years in the liquid hedge fund space, I've sort of gravitated towards a specific style that I feel, that I, either invest in personally or I feel a lot of conviction towards. So at an overarching level, it has to do with market structure inefficiency. So why does this opportunity exist? And then is this the team that can capture it? And then will they treat my investors the right way? Right. So that's kind of my order of operations. In that, then you have a lot of sort of beta-oriented strategies that don't fit the bill. So I have a lot of specialists. I have sector specialists, entertainment royalties, like music libraries, Texas power natural gas trading strategies. Brought on my first cannabis strategy, which is being run by a very established former hedge fund manager. So it's about opportunity, then it's about team, and then it's about sort of that kind of governance and philosophy that fits with me. Now, within my larger team, we have a number of other sort of strategies going on, but the Castle Hill client base, that would basically describe it. So it's a mix of liquid and illiquid.
Sure.
But also the final point I would raise on that is that having gone through March and having gone through this, sort of market spasm, it's nice to see those strategies that perform well or that are positioned to do well when there's greater uncertainty. And so I like those right now.
Got it. And I know this is very important, and whether it's speaking to you or other placement agents over my career, I don't think people realize, or maybe the manager doesn't realize, this is truly a two-way street. It's not hire Castle Hill and expect all the money to just start flowing in. Can you speak about the roles and responsibilities between both you as a placement agent and them as a fund manager?
Yeah, absolutely. No, it's a great question, and it's one that as I've gone through this, been better at establishing the ground rules ahead of time. At the first level, what I need is time and engagement, and time, engagement, and professionalism, and an openness to take feedback and criticism and change. So that's my sort of overarching set of expectations. I'm dealing with a lot of very intelligent human beings who have historically been the smartest person in a lot of the rooms that they've entered. And I'm meeting them in a space where they feel that it's easy and they feel that in some cases, that they're the smartest person, but they're not, right? So I have to kind of, massage that. I need them to understand that these interactions are for the purpose of the investor, not them. And so that they need to have time where they can engage. There's a lot of portfolio managers that simply don't invest the time because they need to be in front of their screens. And I get that's the same for everyone, but the funds that scale are the ones that invest the time and understand that it's a core responsibility.
Let's talk about investor time frame. I'm often asked,
Mm-hmm.
How long does it take from initial intro, so IDD, ODD, and cradle to grave, being able to make an investment? Traditionally, is it 6 months, 9 months, 12 months? And how would you say that differs from, say, a family office, a fund of funds, to a pension endowment and foundation?
Yeah, it's the great question, which I get often asked, like, how long is it going to take? And I often just say, sort of, how long is a piece of string, right? But if I were to give generalizations, right? De novo hedge fund, new relationship, new conversation, met at a cap intro event, met here, met there, 12 to 18 months would be probably like my range on a liquid strategy.
Okay.
In the private equity world, if you're moving towards a close, if there's something specific, unique about it, then I can see that perhaps closing, that being a shorter time frame. I have a current client that has a trade opportunity that has a seasonality component. Mm-hmm. So that's a March introduction and a potential July 1 investment, right? Which would take my 12 to 18 months and throw out the window. Sure. But if there wasn't this seasonal element to it, that it would very much follow that time frame. Families can generally move faster. but they don't need to invest. So this is the dichotomy of our industry, is that you have wherever the decision-making process is short, meaning that there's not a lot of people involved in making a final decision, then you can shrink the time frame. So family offices have, someone is a family member. It's generally, the governance is pretty, there's not a lot of layers, and they can make decisions, but they don't need to invest. That's the thing. They're not penalized for staying in cash or for doing any number of different things. Then you get into sort of the professional investors, call them fund of funds, endowments, foundations. They have an asset allocation strategy. They need to invest, but everyone knows who they are. So they also have a lot of inbound ideas. And then you get to pension funds and consultants, which are a multi-year sort of commitment of time and effort. And it's just a function of how they make decisions. Until pension funds are compensated in the United States like they are in Canada, and given the autonomy and sort of taken away from the politicization of legislatures and governors and whatnot, it's going to be this way. They're just going to kind of gravitate towards larger funds.
Understood. Let's talk about your day-to-day. Are you helping, you had mentioned before, talking about marketing materials, are you helping them create them? Do you have someone on staff that's a graphic designer? Do you engage a third party? Are you helping them put together a DDQ? Are you on the ODD calls? Talk about, maybe a monthly, investor RFPs. Can you speak to what
Sure.
you're involved with there?
Yeah, so I have a background in corporate investor relations. So I come at this not from a trader and not as a former investment banker. I come at this as a financial services marketing professional. So I've created hundreds of pitch books, and I've done speaker training to Fortune 100 CEOs, and I've done one pages until so what I do, there's kind of three core messages which we need to get across. And so the first stage of the process is really creating the one pager, the deck, and the DDQ, right? The due diligence questionnaire. And that's formatted in a way that's really easy for investors to get the information that they want. Then we talk about data rooms and what we should be putting in these data rooms, and what we should be hosting in the data room. And then, so that's kind of the materials prep stage. Then there's speaker training, which is critical. So I listen to a lot of calls, we give feedback. I have something I call the placemat, which has a lot of, this is what managers need to cover on this call. And it's in colors, and there's like big arrows, and it's all right here. So they don't get drawn into specific trade examples or drawn into the weeds. They keep it at a very high level and craft the narrative. So in our world, you need two things. You need a story and you need data. The data is the data, right? I can help them prepare it and I can help them publish it, but I can't help them create it, right? Like the data is the result of their investment performance, but they have to have it in a form factor which investors can accept, right? So I need to make sure it's available. But the narrative and the story, and why anyone should necessarily care, that's where I get intimately involved, because that's what excites me about all of this.
So research. How do you source new managers? I don't know. Are you getting those from cap intro teams? Are you getting those from other fund managers, other placement agents, other investors? Can you speak about how your process is for sourcing managers?
Yeah, it's a good question, because this is what's nice about our business, is that it's not winner take all, right? We're not. This is not Google here, right? So there will be multiple placement agents. There will be multiple third-party marketers. There will be multiple, because you can't run the marketing programs of every asset management company, right? First of all, you can't do it, but second of all, you get conflicted, right? You can only represent a specific horse in every race, right? You can't represent 5 healthcare long-short managers. Doesn't work. So I'm always on the lookout for a specific type of long-short manager, generally sector specific, generally lower net. I know exactly what to do with that. On the illiquid side, I look for capacity constrained, very niche-y, specialized strategies. So how do I source these? Generally from investors and generally from other managers. I actually, just personally, I went through March and April, and that exercise provided a useful kind of focusing effort for me, because perhaps before I was thinking about 10 ideas, I came out of that thinking about 4. And those 4, I have a lot more conviction on at this point. So the short answer to the question is, I try to stay in the batter's box and really wait for the right pitch. I'm not actively out canvassing for new product at this point. Some of the reps on our platform may have a credit experience, so they're looking for credit managers. Some of the marketers on our platform raise money for biotech companies. So they have their specific verticals. I have one gentleman, all he does is focus on insurance companies. So he knows exactly what types of strategies they look for, and that helps kind of define his box.
Understood. So reporting, let's talk about that. What sort of reporting do you provide clients, whether it be, from the CRM, where they are in the pipeline, with a particular manager, those type of things? Can you talk about your reporting?
Yeah, so, for all of our engagements, we generally prepare what's called a Schedule A, which is a list of names that are sort of approved. As the relationship evolves, many times the Schedule A just kind of falls away and we just have a dialogue and we're sort of part of the furniture, and that's a good relationship. I generally provide updates via that Schedule A. I'm aware that you can use Salesforce and you can provide all sorts of updates in terms of how many calls you've made and whatnot. My approach is much more focused than that. And I view every investor interaction as like its own Fabergé egg, right? Its own separate dialogue, and has its own characteristics and dynamics which need to be managed individually. So some may take, so within that, that's how I sort of work with my managers in terms of how we're following up with each one of those. So yeah, Excel works great. I have a CRM that I share with all the reps on my platform. It has reporting. It's great. It's where I keep all my notes. But for the most part, I'm putting my client and the investors together and helping them foster their own relationship, because that is what is going to create a transaction and create a long-term partnership. So I have an intermediary function at the beginning, but then I transition to be much more of an observer and a guide, as opposed to just, you give me information, I give it to you, you give it to me, I get, like, that's less of what's interesting to me, or actually there's not as much value there.
Understood. So we talked about a lot today. So
Yep.
Let's talk about fees. What does this all cost? And is it a success fee only? Is it retainer?
Sure.
Is it a combination or a hybrid of those two? And then if you can, maybe you're not giving away the secret sauce of Castle Hill per se, but market, hedge fund versus private equity as well. And if you could speak to that.
Yeah, absolutely. So you have 2 ways of getting paid. Well, 3, I guess. You have 2 ways of getting paid. You can get paid a percentage of fees, you can get paid a percentage of assets, or you can get paid some sort of retainer plus some combination of that, right? So in liquid strategies, the rack rate where conversations usually begin is 20% of fees in perpetuity. And managers may push back, and marketers may push back, but that's sort of where the conversation begins. You'll see sunsets, you'll see accelerated percentages at the beginning and maybe trailing off. You'll see, if there's a tremendous amount of like presentation work, one-pager, speaker training, like you really need to get this thing to a level that it's professional. I can see a draw that's against success. I can see it. Sometimes there's fees, and then the success is on top of that. I have a bit of, I don't do it that way because I want to be judged on my ability to succeed and raise capital, which I've raised money for every fund that I've represented. And so I'm content to take that as a draw. I think that creates a little bit more alignment. When you go to private equity, you have some former bankers that are used to getting a retainer and then taking some sort of success fee. That's fine. But it's usually a percentage of the raise. So let's call middle of the fairway is 2% paid quarterly over 2 years is where the conversation begins. If it's a lower fee product, maybe it's 1%, maybe it's 1.5%. And that looks, so I would say just that looks great in Excel. You put in like $100 million, 2%. Oh, great. Excel doesn't necessarily show the depth of a J curve in terms of building out one of these businesses. So it's, where Castle Hill brings a lot of value is that we also get involved in pre-IPO trades. We get involved in liquidity solutions around illiquid assets. We have a whole kind of brokerage function to our business. So what we offer our reps is this portfolio of revenue sources, as opposed to just introduce, person A to person B, and if something happens, you get paid, and you got to negotiate all this stuff ahead of time. So I'm a big believer in diversity of revenue, for people to sleep at night and really be able to select good product, as opposed to just pick things that because they need something to sell.
Sure, understood. And why don't I turn this back to you? Any final thoughts or comments that you have?
No, I mean, I think that it's a very important function, because I spend a lot of time, I wake up in the middle of the night, I work all the time, I'm thinking about how to keep these processes, these individual sales processes, moving forward, right? And part of that is by, gathering investor intelligence. Part of that is really understanding my managers. But the more that, the people in our world are doing that, and really understanding both sides, I think that it's, everyone's served better and less time is wasted.
Great. Well, great, Andrew. I really do appreciate you joining me today. I had a lot of fun, really enjoyed this. Hopefully everybody else enjoyed it as much as I did. And I hope you enjoy the summer and stay safe.
Thank you, Frank. This is great. I really appreciate it.
Thank you.